All right, welcome everybody. Welcome to today's live stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Good morning, Richard. Good morning, Jim. Hopefully you guys are doing well. We are now live both on Facebook and over on our YouTube channel as well. Let me know before we jump into the swing of things here today. If you guys can hear me out there, let me know that the video is coming through for you, or the visual and audios are coming through for you guys. Once we have confirmation of that, we'll go ahead and get started. But first and foremost, welcome, especially if you're new. If this is your first time, thank you for tuning in here today. Once again, my name is Patrick France. I've been here at VectorVest for about 10 and a half years, going almost up on 11 years soon. And I am an instructor here at VectorVest where I teach our users, subscribers, everybody how to use our software to make sure that you can reach your goals of becoming financially independent through the stock market. So every Thursday we go live here on both YouTube and Facebook, where we talk about the stock advisory app, the VectorVest mobile application that can help you make smarter, better, and faster decisions and help really manage your whole entire portfolio. Awesome. Thank you guys over on our YouTube. Thank you guys over on our Facebook. Good morning, Becky, Chris, Mark, Daniel, Jim, Drew, Mike, Bob. Hopefully you guys are all doing well. Good morning. Good morning. Welcome, everybody. So today we're going to do something a little different that we haven't done in a long time. Today we're actually going to be taking a look at the different markets all around the world and see what those market timing graphs are showing, see what the color guard's telling us about those markets, because sometimes it's nice to not only focus on the market that you're focused on, but take a look at the global markets to see, get an idea of where those are heading and what kind of impact that could have on the US markets as well. Depending on where you're tuning in from. When you look at global markets, you get a better sense of what's actually happening. Just like when we talk about the VectorVest composite, it's an arithmetic indexed average of about 8,800 stocks I believe currently. And that gives us a better representation on the US market because it's not just looking at small segments of the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at 8,800 stocks in the US market. So to expand on that view, the same type of situation can be true when you look at global markets and you take a look at what's happening in those markets, because that's taking a look at the global picture of things, if you will, and that can help us get a better idea of what to expect going forward, essentially. So as always, we start off taking a look at what's going on in the US markets here this morning, and then we'll dive right into our topic. And as always, I know this is a very popular fan favorite. If you have any stocks that you want to see analyzed, make sure to stick around towards the very end, where we'll analyze any stock that you want to take a look at in less than 10 seconds and show you how fast and efficient the VectorVest stock advisory can make analyzing any stock out there. So while we jump into it, if you haven't already, I see we got 50 people roughly over on our YouTube, on our Facebook. Can't see how many we have on our YouTube side, but if you guys haven't already, smash that like button, hit that share button. If you're on our YouTube side, make sure to subscribe to the channel if you're not already subscribed, and let's get into it. So right now, the market is 3 ticks into the red, the color guard is bearish, and VectorVest doesn't advocate buying any stocks at this time. If we scroll down, as always, we take a look at the color guard itself, and we see where those 3 red lights come from. The first indicator we look at is the price, which is basically the price of the VectorVest composite. And as I mentioned earlier, the price of the VectorVest composite is an arithmetic indexed average of about 8,800 stocks in the US market. And we'll see the differences in the different markets today as well. But for right now, just sticking with the US market. The next indicator is the RT, or relative timing. And the relative timing is the short-term price trend on the overall market. It's cast on a scale of 0 to 2. So above 1 shows the short-term trend is up. Below 1 would show us that the short-term trend is down. Then finally, the BSR, or the buy to sell ratio, shows the overall health of the market. Every single day, VectorVest gives a buy, hold, or sell rating on each and every stock. And we take a look at the number of buys and compare it to the number of sells to get an idea on the strength of the market. So if there's more buys and sells, the buy to sell ratio would be above 1, which would show strength in the overall market. And as it is right now at 0.54, that shows us there's clearly way more sells than buys in the database, almost at a factor of 2, or almost at a rate of 2 to 1. So therefore, that indicates overall market weakness currently. And then these 3 indicators are comprised to come up with the MTI, or the market timing indicator. Now, the MTI is cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So above 1, the underlying trend is up. Below 1, the underlying trend is down. At 0.91, we can see the underlying trend of the market is now down. And then getting past that, we get to the trend column, which typically shows 2 parts of the trend each and every day, like you can see on the day prior where we had that down. So therefore, the first part is looking at the primary wave, or simply the weekly trend of the market. And as we can see, it is down. The second part is looking at the underlying trend, or just reiterating the MTI. So therefore, we can see that is down since the MTI is below that level of 1. Let's see. Snoopy, any stocks you want to have analyzed, make sure to stick around towards the end. I'll get to analyzing those. So because right now, if the market closed at this moment that we are live right now, we would end up with a confirmed down signal. So that's our most conservative signal that we have here at VectorVest. It's our last signal to get into the market and our last signal to get out of the market. So therefore, you never want to ignore that confirmed call change. And as we can see, as of right now, we could potentially end up with a confirmed down signal here today. So if things turn around miraculously through the latter half of the session here, because we know that there is a lot of time left in the markets here today, that could change. But as it looks right now, we could end up with a confirmed down signal. So keep that in mind as we go through everything here today. All right, so as we scroll down, we always like to take a look at the, at the advanced declines. And what we're looking for typically is a 2-to-1 bias. So if we're looking to buy something long, we want to see twice as many buys in decliners or advances in decliners. And if we're looking to short a position or open up a contra ETF, we want to look for twice as many declines and advances. This way, you know that you're putting probability on your side, and that if you get into a trade that day, that the wins are to your sales and you're starting off on the right footing there. So as we can see, we have 25% of stocks moving higher and 63% of stocks moving lower, clearly meeting that 2-to-1 bias that we like to see. So if you're considering opening up a hedge or a contra ETF over on our YouTube side, if you guys watched yesterday's video that I posted, or that we got posted yesterday, I talked about 3 potential ETFs to look at when coming up, when considering if this market does correct. You can find that there. You see I talked about some contra ETFs to help you out, and looks like, you know, today would be a good day to open up those positions if you needed to. All right, so looking at the major indices at the very bottom, the Dow is down about 0.6%, NASDAQ's down about 0.6%, S&P's down about 0.7%, VectorVest Composite down about 0.4% so far for the session. All right, so that's what the U.S. is doing. If we go take a look at the graph real quick at the U.S. market, internet issue once again, gotta love it. Let's go back here. Let me sign in real fast. Sorry about this, folks. Happens every single week. I don't know why it does this. I really haven't gotten an answer of what's causing that, but we're looking into it, figuring out what it is with the internet here that I keep getting disconnected after that. All right, so what we're looking at is the price of the VectorVest Composite. We have a 30-day weighted moving average based from what we were talking about last week with the DEW timing system on the mobile. And then at the bottom, we have the MACD. So prices have been steadily rising over this over the course of this year. No surprise to anyone there. But we have noticed a slowdown in that momentum, and actually any momentum indicator you look at shows softening in the market, and therefore, looking at the MACD has been steadily dropping as well over the course of the last 6 months, 9 months roughly for the year. If we go ahead and change it from MACD to DPO, therefore a trend or a momentum indicator, we can see momentum has been steadily waning over the course of this year as well, even though prices have been steadily moving higher, showing some softening and something to really be careful of as we move forward. All right, so that is the U.S. market in review. As always with VectorVest, or with the stock advisory, you can come up here in the upper left-hand corner and choose the market. Let's take a look at the Canadian market here. So right now for the Canadian market, we are 3 ticks into the red. The market is bearish, and VectorVest does not advocate buying any stocks at this time. So very similar to what we just saw with the U.S. markets. If we scroll down, we can see those 3 red lights once again all across the board. So price is lower day over day and week over week, so therefore the price is red. RT, same situation, lower day over day and week over week. Clearly have a red light there. Buy to sell ratio, lower day over day and week over week. So we have 3 red lights right now. Looking at the MTI is steadily moving lower over the course of the week. Looking at the trend column, we have a down situation ever since last Thursday, really. So you have an up last Thursday, but since that point, the underlying trend of the market has been moving lower, and the weekly trend of the market has also been moving lower, giving us two down signals in the primary wave and in the MTI. But however, the calls or the confirmed calls still remain that up situation currently. Hey there, Jeff. Hopefully you're doing well this morning. So what we see out of the Canadian market is we're still long-term bullish, but our shorter-term indicators are starting to show weakening or softening once again. Awesome. Hey, thank you for that, Becky. I appreciate that. Becky, if you guys are in our Facebook chat, show Becky some love. Thank you for those stars. I greatly appreciate that there, Becky. All right, so as we move down, we take a look at the advance and declines. The advances are up to 18%. The decliners are up to 41%. So we meet that 2-to-1 ratio. If you're in our Canadian markets, you're watching here today, today would be a good day to open up a contra ETF or to open up some sort of a hedge on your positions. Looking at the major indices, so the venture for the Canadian market is more of the smaller cap stocks. That is down about 1.2%. The TSX is their bigger exchange that people like to focus on. That's down about 0.2% here. Overall, though, the VectorVest composite down about 0.33%. All right, so let's go ahead, take a look at the VectorVest composite on the graph here as well. So for the Canadian market, let's go maximize this real fast. Same situation we're noticing with the US, but a little bit clearer here, in my opinion, than what we saw with the US. So as we can see, prices have been rocking and rolling ever since the beginning of the year, really even longer than that. But for the last 12 months, we've seen a nice steady rise in price on the VectorVest composite in our Canadian markets. But look at the DPO at the bottom. Once again, DPO, for anybody just tuning in, stands for the Detrended Price Oscillator, and it's a great momentum indicator. It oscillates around that level of 0, and above 0 shows positive momentum or an uptrend. Below 0 shows negative momentum or a downtrend. So as we can see, it has been in an uptrend most of the year or throughout the last year. No surprise there. But every time we see that new leg up, that DPO consistently hits a lower high, showing less and less momentum every time we get that next leg up. This is something to be cautious with and something to pay attention to. I talked about it a lot last night in our video over on our YouTube channel, but it's something that we've been talking about a lot here over the course of the last few months even. So when you see these bearish divergences like this, it's something that you definitely want to keep an eye on. We don't necessarily want to change our portfolio the second we start noticing that bearish divergence, because as you can see, they can last for quite a while. But once you see confirmation of that downtrend, let's say you have a trend line on price here connecting the lows. Once you see that downtrend or that trend line broken, that could be the confirmation you're looking for to get that early entry without necessarily getting whipsawed out of your positions. What is the criteria for a confirmed down? So Kent, in which market? Because different markets have different rules. Just because, there's more volume on the U.S. markets. The U.S. markets have slightly different rules than the others. But for U.S., essentially what you're looking for is price to be moving higher day over day and week over week for 2 consecutive 5-day trading periods. You're also looking for the buy to sell ratio to be above 1. That's pretty much the rules. So you're looking at buy to sell ratio and you're looking at price movement for day over day and for 2 consecutive 5-day trading periods. Other markets sometimes change out from the buy to sell ratio because they have a smaller amount of shares available in those markets. So instead of looking at the buy to sell ratio, they may be looking at the MTI. That's usually the main difference between some of the markets, but overall, both have proven very consistent over the years. All right, there we go. So that's the Canadian market. Let's go ahead and take a look at the European markets here. So with the European markets, I will preface this before we jump into it. Some of these are end of day, such as Europe, UK, and Australia. So these are going to be end of day data, whereas the US and Canada, we do have intraday data coming through. So streaming just on a 15-minute delay for you. So looking at the European markets, we're 1 tick into the red in Europe. Therefore, the market or the timing gauge is mildly bearish, and VectorVest does not advocate buying any stocks at this time still. So Whether you're in US, Canada, or Europe, VectorVest still doesn't advocate buying any stocks in those markets currently. We scroll down, we see the one red light coming from that price column because we're moving once again lower day over day and week over week. We look at the RT, it is moving lower day over day and week over week, but it still remains above 1. So therefore, the worst it could get right now is a yellow light until the RT drops below that level of 1. We'll remain with yellows there. Same with the buy to sell ratio. So even though the buy to sell ratio is dropping lower day over day and week over week, it still remains above that level of 1. So therefore, yellow lights are all we can see until the RT and BSR both drop below the level of 1. Looking at the MTI has been in pretty lofty levels compared to what we've seen with the US and the Canadian market so far. At 1.39, the underlying trend of the market still remains in an up situation. So looking at the trend, obviously, we now have a primary wave down, so the weekly trend is down, but also the underlying trend of the market is still up. So on a short-term basis, we are seeing some softening in the European markets, but on the underlying trend and the longer-term basis, we still remain in those up situations there. Looking at the advance and declines, as we can see, the advances finished off almost 30% higher or 30% up, and decliners finished with 60% winners. So therefore, we have more selling than buying in that market. So that is why we don't advocate buying any stocks right now in the European markets, even though the underlying trend and the longer term trend still remains in that up situation. The view shown, is that for mobile devices only? Roger, so the view that you're seeing here is on an iPad. So therefore I have a bigger canvas to work with here. That may be why it looks a little bit different if you're on your cell phone. I used to use my cell phone, the mobile, for quite a while, for years up until this year actually. But then for viewing pleasure and being able to see what I'm talking about a little better, I upgraded finally to an iPad so you guys can see more of the information and see it clearer there for you. But yeah, this is the VectorVest stock advisory on the iPad, whereas it looks a little bit different just because you don't have as much space over on a mobile, but you get the same exact information though. All right, so taking a look at the major indices out of the European markets, the AEX. I know some of these, I'm not familiar with all of them. So AEX down about 0.5%. Really, the main ones we want to look at, Belgium 20 down 1.1%. France is a CAC 40 down about 1%. The DAX is the German market, the biggest market in the European markets, down about 0.7%. Then we have, what else do we have? IESQ, I believe that's Italy, if I'm not mistaken. That is down about 0.75%. IG or SMSI down about 1.6. Overall, the VectorVest composite down about 0.7% here for the day. So if we go take a look at the VectorVest composite, let's go 1 year, zoom in. Similar patterns we're noticing all across the globe so far. Now we still have 2 more to go, but the same situation that we noticed with the US, with Canada, is still happening here. We have prices steadily rocking and rolling, moving higher, but every single time we make a new leg higher, we end up seeing lower highs on the DPO. So momentum is waning as prices continue to get more and more pricey, essentially. Let's see, what's your opinion on uranium for long hold? Trudy, there's a lot of, so I've read a little bit about the uranium play right now. It's quite interesting, but it's more of what's happening with that's causing the ramp up in price, more so than anything fundamental or useful for that. It seems to be, a major whale out there is buying up as much uranium as possible, trying to basically squeeze the market. So if you want to buy anything, you have to pay his price. Kind of sounds like a monopoly in my opinion. And something I'd be a little careful with, because, the one criteria that's going to make it drop at that point, if that is the case, is if he decides to sell, which could be at any point. He doesn't have to tell anybody. But if he starts dumping that uranium into the market, you could definitely see a huge drop in that, which would be a little risky because there's no warning that you could potentially get from that. All right. Snoopies. If you, I will be glad to take a look at those ETS for you. Just stick around towards the very end. I'll look at them there. As always, we save those to the very end. But yeah, also take a look at our YouTube channel. If you've never looked at it, go check out the YouTube channel. Go watch the video I did last night. You'll see SQQQ in there. You won't see SRTY, but you will see SQQQ in there. All right, so Europe, same situation we saw earlier. Let's go ahead now, take a look at the UK. UK, one tick into the red. I'm expecting to see the UK, before we even look at this here today, I'm expecting to see the UK more in line with what we saw in the European markets. So UK, one tick into the red. We do have that red light coming from the price column. The RT is lower day over day and week over week, but still above 1, so therefore it's going to stay yellow. Same with the buy to sell ratio. MTI, though, is in nice territory at 1.26, but the overall trend on the MTI over the last week is steadily moving lower. So we look at the trend column, the primary wave is down, telling us that the short-term trend or the weekly trend of the market is down, but the underlying trend still remains intact with an MTI of 1.26. Also looking at our longer-term signal, the confirmed call, that still remains in that up situation. Now, we do have a little bit different of a look than what we saw with Europe, where we have that yellow flashing light in the price column here. That shows, or that is indicating the RT kicker combo timing system. Essentially, if you're not familiar with it, it's more of a swing trade timing system that we have here at VectorVest, where it gives different buy opportunities and different sell opportunities, basically. We're looking at the price of the VectorVest composite moving higher or lower. We're looking at the green lights in the price column or red lights in the price column, but we're then using it, or we're taking it one step further and adding some moving averages on RT to smooth out that price direction. And therefore, when that short-term moving average is below the longer-term moving average, and we have that red light, for example, that's when you see that star coming in showing it's confirmed by those two moving averages. Same exact thing would be for the upside. So if we had a green light and the short-term moving average in the RT was greater than that longer-term moving average, then that would be confirming that green light, showing momentum to the upside. Therefore, you'd see that green light with the asterisk or that star there. So we scroll down here a little bit, take a look at the advance to declines. Advances are sitting up about 25%, decliners sitting down about 53%. Clearly that 2-to-1 bias that we want to see. So if you're in the UK markets, we have some opportunity to potentially open up a hedge or short or take advantage of the downside currently. We take a look at their major indices. So the FTSE AIM is down about 1/3%. The FTSE 100 down about 1/4%. VectorVest Composite down about 0.5% here. All right, looking at the overall market timing. Once again, very similar situation. A little bit different than what we've seen with some of the other markets, but the overall trend still seems very, very similar. Prices have been steadily rocking and rolling, moving higher, whereas the DPO, a little bit more choppy than what we've seen so far, but overall the move is lower, showing less and less momentum again here out of the UK markets. The only positive I can make here with that is on a short-term basis, this most recent leg here does have a momentum push higher based off the DPO than that last leg. But when you look at the longer term, you definitely see the lower highs and lower lows coming in. And that's something you want to be careful of, especially moving forward. Also, looking at the 30-day weighted moving average, we can see that it has created some decent opportunities to give us some nice swing trade opportunities. And we did just break down below that 30-day weighted moving average just recently. If we look back at previous times, it kept us out of some of this sideways action here, pull back here. So every time we break down below the 30-day weighted moving average in the UK markets, it tends to be short-lived. Well, let's see if that same pattern holds true. So if you're in the UK markets, you're looking for an entry point, I'd wait to see the price cross back above that 30-day weighted moving average, get followed through that next day. That could be your entry. But for right now, this is the time to simply be patient and wait for the better buying opportunity to arise. Don't go try to chase any trades here. All right. So last but not least, we'll take a look at Australia, which If you're not familiar, if you are an Australian subscriber watching here today, once again, what are you doing, or what are you doing up right now? But also thank you for tuning in if you are. And also glad we could finally get this back up and running. And hopefully you guys are all set and getting the information you're looking for here. All right. So out of the Australian market, we are 3 ticks into the yellow. Therefore, the market is neutral, and VectorVest advocates caution when buying stocks at this time. Can you talk all? Hey, I could talk about VectorVest all day long if that would not be hard. Glenn and I have already done it before. If anybody was in for our Robinhood IPO stream, Glenn and I were live all day long, so it's not hard. All right, so we have 3 yellow lights. Looking here, the price of the VectorVest composite is higher on a day-over-day basis and on a week-over-week basis, but 5 days earlier we had a red light, so therefore the best we could get is a yellow light in that price column there. RT is flat day-over-day but higher week-over-week, so because it's not moving higher on that day-over-day basis, it stays yellow. Buy to sell ratio, because it's below 1, it can't go green, so therefore the best we're going to see is a yellow light there. Looking at the MTI is at 1.05, pretty flat overall. We haven't really seen a big change, but then again, the Australian markets tend to be more slow paced, less volatile, just smooth and steady more so than anything else. And that's exactly what we're seeing with the color guard here. Looking at the trend, we're in an up situation. The confirmed call is also up as well. Looking at the advance and declines, advances are sitting at 42.5%. Decliners sitting at 31%. So mixed day overall, not a whole lot of movement in either direction. So therefore, just going to be simply patient, or be patient. Let your stops manage their positions, not open up any new stocks or new positions. Just currently letting things, manage themselves. Looking at the major indices there, the AORD, which is their main indice, up about 0.5%. The ASX 200 up about 0.6%. The VectorVest composite up about 1/3% for the day. We take a look at the graph real fast. Same situation. Prices have been steadily rocking and rolling all year round. Looking at the DPO though, DPO has been a little inconsistent for the first half of the last 12 months, but since about April or so, we have experienced a clear bearish divergence here where we're noticing DPO steadily moving lower, even though price is steadily rocking and rolling. Every time though we've broken below that 30-day weighted moving average, it tends to be short-lived. So keep your eye on that 30-day weighted moving average. If you're in the Australian markets, wait to see it break back above, because every time in the last year we broke above, had a nice rally, broke above, had a potential rally right there, stayed out of this though. That's the big key thing. Broke above, had a decent rally, broke above, decent rally, moved sideways for a little bit, nice rally here. So therefore, the 30-day weighted moving average is a great indicator to use. A very simplistic look. Obviously, we do a lot more in-depth analysis in our weekly market timing videos that we release for you. But to give you a quick snapshot, that's what we see currently. So if any of you guys have questions on any of these markets, feel free to let me know in the chat or in the comments. I'd be glad to answer those for you. If not, let's go ahead and switch back to the US markets and start to analyze some of the stocks you guys want to take a look at. So here is the fan favorite. If you guys have stocks you want to see analyzed, put those tickers in the chat or the company name in the chat or the comments. And before you do that, if you haven't already smashed that like button, go ahead and do so now. If you're on our Facebook page or watching this through Facebook, hit that share button at the bottom. Doesn't cost you a thing, but definitely helps me out, helps you guys out, and helps grow this community that we've built so far. All right. The OG distraction. Okay, we'll take a look at it. I'll pull it up. All right. So, starting off, to appease my colleague Glenn Tompkins here, we'll take a look at AMC. So AMC, first and foremost, before we really jump into how fast we can analyze this, let's take our time with this one and then move on faster as we get to the next one. So first and foremost, the 4 indicators at the very bottom are all cast on scales of 0 to 2. Above 1 is good, below 1 is bad. If you can remember that, VectorVest will make your life a lot easier. So the first one we come to is the RV, or relative value. This is looking at the long-term potential of the stock over the next 1 to 3 years. At 0.4, that tells us AMC currently has poor potential over the next 1 to 3 years. Then we get to the RS, or the relative safety, which is looking at the risk factor involved with the stock. Below 1 tells us there's more risk associated with it. If it was above 1, that would tell us less risk is associated with it. So this stock has poor long-term potential and a lot of risk. Let's move on to the next one, RT, the short-term price trend. At 1.25, it is in a steady uptrend, but not strong enough to offset the amount of risk involved with the stock, so therefore the stock is not currently favorable. The RT needs to pick up a little bit more before that amount of momentum behind it is worth taking that risk for the speculative or aggressive traders out there. All right, let's see. LCID, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Therefore, the stock is not favorable right now. CEI, poor long-term potential, a lot of risk associated with it. You are in a steady uptrend, but not enough to offset the amount of risk involved with the stock. Therefore, the stock is not currently favorable. BNTX, great long-term potential, solid fundamentals, so less risk associated with it. You're in a really strong uptrend. Overall, the stock's definitely favorable here. KMI. Also, if you are tuning in from a market, or if you are tuning in outside of the US here today and you want to look at a stock that's not in the US, but it is in one of the markets that we just covered, just let me know whenever you type in that stock, so that way I know to switch the market there for us. All right, so KMI, good long-term potential, but does have a little bit more risk associated with it. You're in a steady decline. Overall, the stock's about average right now. Let's see. ENDP, good long-term potential, but does have a lot of risk associated with it. Timing at 0.36 tells us this stock is dropping faster than a rock. Overall, definitely not favorable here. Riot, RIOT. So Riot, great long-term potential, but does have a lot of risk associated with it. You are in a steady decline. Therefore, the stock is favorable, but the timing is not right to be long in it. MSFT, great long-term potential, less risk associated with the stock. You have a nice steady uptrend. Overall, the stock's favorable. COG, let's go take a look. COG, great long-term potential, but does have a lot of risk associated with it. You are in a strong short-term uptrend. Therefore, the stock is still favorable. You know, RT of 1.44, even though it's down 3% here today, overall markets are down. But on the short-term basis, still in a strong uptrend. All right, let's go take a look at the next. SNAP. So Snap, poor long-term potential, a lot of risk associated with it. You do have a strong or a decent short-term uptrend, but not enough to offset the amount of risk involved. So therefore, the stock is not favorable currently. Let's see what else we have. DHI, great long-term potential, less risk associated with it. The stock's basically flat on a short-term basis. Great stock, but as always, every single week I talk about it. When looking at the RT, if you're buying into a stock, you want to see that RT at 1.1 or greater typically. If it's below 1.1 and it's in between 1 and 1.1, stock's really just, kind of moving sideways and could end up being a loss in opportunity rather than a loss in capital. But, if the stock's just churning sideways for a while and there's another stock that's running, if your money's all tied up in a stock moving sideways, you don't want to get out of it quite yet. You want to give it more time. Well, then you don't have that extra capital to put into this hot mover. So therefore, you got to be careful with that and keep an eye on that as well. So typically, we like to see that RT at 1.1 or higher. Let's see. So Mara, great long-term potential, but does have a lot of risk, or does have more risk associated with it. You have a really strong short-term uptrend. Overall, stock still favorable here. Google. Which one? Let's see. We'll go. Oh, wait. We'll do. I don't know which one you want to take a look at there, Mike, but we'll take a look at GOOG. Both of them are insanely expensive. All right, never mind. I thought I had one, but. So this one, great long-term potential, less risk associated with it. You're in a steady uptrend, so overall, stock's favorable here. FSK. FSK. So this looks like it's an ETF. I know that because the RV and RS are exactly one. Any ETF is a basket or conglomerate of equities or whatever it may be, or it's looking at some underlying equity. So therefore, it's not like a company that reports quarterly earnings and you can analyze its balance sheets. So therefore, the fundamental indicators RV and RS here at VectorVest are always going to be at 1. Your primary focus is always going to be RT on an ETF. So at 1.1, you have a steady uptrend. Overall, the stock's favorable slightly. Visa. So Visa, good long-term potential, solid fundamentals. However, the timing is just not there. Good stock, not the right time to be long in it. Let's see. KPLT. There we go. KPLT. Great long-term potential, but a lot of risk associated with this stock. It's steadily moving lower, dropping pretty fast, actually. Overall, the stock is not favorable here. Etsy, ETSY. Etsy, great long-term potential, less risk associated with the stock. You have a steady uptrend. Overall, stock's favorable. All right, I'll get to those for you in 1 second, looking at those UK equities. What's happening with VRT? VRT. So VRT, good long-term potential, but does have a little more risk associated with it. You're in a decline. Overall, the stock's a good stock, just not the right time to be long in it. From what it looks like, it looks like an earnings miss or something to do with earnings. That's where I would spend time. I'm not familiar exactly with what's going on with it because I haven't looked at the news. But that would be my best guess, is something to do with earnings that saw that drop here recently. But it is an aggressive play. So aggressive plays have bigger swings, and that's what you're seeing with it. UMC, great long-term potential, less risk associated with the stock. You have a really strong short-term uptrend. Overall, the stock's definitely favorable still. ISRG, I haven't seen that stock in a while. Thank you for bringing that one, Glenn. So ISRG, great long-term potential, less risk associated with this stock. You have a slight uptrend right now. So overall, the stock's definitely favorable. That's one that I've watched for at least the last, 8 years. I like that stock. I like what they do, at least, more so than anything else. All right. So we got some we got some other stocks here. So let's go ahead, jump into the UK markets first and foremost, and take a look at 3USL. US. Not seeing that. Maybe you got some insight. 3U. Is there you? Let me know which one it is. US.L. I'm assuming that the L is for the .L for the London Exchange, but I'm not familiar with what that 3 is representing. QQQ3. Okay, so you do have numbers in your tickers. That's something unique. So QQQ3, obviously an ETF, a 3-time leveraged on the NASDAQ. 1.2 shows we're still in a short-term uptrend. Overall, it's still favorable. But as we've been looking at here, we have seen some softening in the overall markets. Definitely just keep your eye on that timing. Be more cautious right now If you want to tighten up your stops, that wouldn't be a bad opportunity to make sure you're locking in your profits, because if the uptrend starts to break and we start to see it come crashing down, you definitely don't want to be in the 3-time leverage when it starts going against you. All right, and then 3 USL. Okay, so 3 US. I'm not finding the 3 USL there. So I did find the QQQ3, but I'm not finding the USL. So let me know which one that is, and I can analyze that here for you. All right, let's go into the Canadian market. We have one here, MAGT. Poor long-term potential, but less risk associated with it. So more of a conservative play here. You have a really nice, strong short-term uptrend, so overall, still favorable. Let's see what else we have. Any others before I get out of here? Stocks are favorable only in the eyes of the buyer or seller. Stocks are favorable based off the analysis on them. Not this is the great thing, Louis, about what VectorVest does. VectorVest is not just like any other service out there where we just take a whole bunch of opinions and give you the average of them. It is analyzing it on a systematic approach, so that way it takes the human emotion, the human guesswork out of it, and gives you a comparison of every single stock, apples to apples, rather than trying to compare apples to oranges, or my opinion to somebody else's opinion. So it's not when I say favorable or unfavorable, it's not my opinion or the buyer's opinion or the seller's opinion. This is the data, and we're analyzing the data. We're not giving personal opinion in it. Remove the human aspect out of it. Remove the human emotion out of it. Focus on the data. Be systematic in your approach. That's what VectorVest is doing day in and day out there. All right, ACQ, sure, ACQ. Great long-term potential, less risk associated with it. However, the timing at 0.71 tells us it is in a steady decline. Therefore, it's a great stock, just not the right time to be long in it. All right, so we've gotten some of those. Let's go back to the U.S. I see some U.S. ones coming in. Is it going down now? Is what going down now? How do you suggest on hedging, maybe using like SQQQ? So Snoopies, I've talked about hedging periodically, but if you use a triple leverage ETF, you don't have to buy as much because it offsets the portfolio faster or more so than if you had a 1-to-1 or like a non-leverage ETF. So it depends on how much the portfolio has in it, would depend on what type or how much you need to buy to hedge your portfolio. There's some courses that we teach more in our long-term investing courses, or that we have some formulas for you that give you a formula to figure out how much you need to buy of a single or double or triple leverage ETF to hedge your portfolio. I don't have that with us, but if you're interested in it, give our support a call, ask them about it. They'd be glad to help you out with that. All right. Let's see. APLD. Not finding that one there. CPNG. There we go. Poor long-term potential. A lot of risk associated with it. You're steadily dropping. Overall, stock's not favorable here. ENTG. Great long-term potential. You have a nice, solid uptrend, less risk associated with it. Definitely an overall favorable stock here. Let's see. Evergrande. I'm just going to go ahead and say it now, Droppa. Unfavorable. BT. Let's take a look. BT. Poor long-term potential. A lot of risk associated with it. Steadily moving lower. Overall, not a favorable play right now. Robinhood. Poor long-term potential. A lot of risk associated with it. You're steadily dropping. Overall, not favorable here. BABA. Poor long-term potential. A lot of risk associated with it, or a little bit of risk associated with it. However, you're pretty much dropping like a rock right now, so stock's definitely not favorable currently. PFE. Oh, PFE. So PFE, great long-term potential, less risk associated with it. However, the timing is starting to decline. So it's a great stock, just not the right time to be long in it. Overall, good stock. Timing, not so good. XROF, all right. EXROF. So XROF, poor long-term potential, a lot of risk. This is a speculative play. Timing at 0.7 tells us it is in a steady decline. Overall, it's not favorable. But there has been some rumors. I haven't actually been able to verify it yet. But I did see some rumors coming out that XROF has started shipping out brochures of their product line out to potential buyers. So that is some great news. But until I can really confirm that, until they start showing some sales numbers, it is going to be a speculative play. I like where it's at. Just need to start seeing those sales numbers coming in. All right, STMP, great long-term potential, less risk associated with it. You're in a strong uptrend. Overall, stock is definitely favorable here. BNED, poor long-term potential, a lot of risk associated with it, but you're rocking and rolling higher right now. So overall, the stock is favorable. If you're speculative, if you're a momentum trader, day trader, this is definitely a good play. MGNI. MGNI, great long-term potential, but does have a lot of risk associated with it though. You're in a steady decline. So overall, the stock's about average, but timing is most important, especially if you're long into it. And right now is not the time to be long in it. All right, SPRT. Oh, what's going on? SPRT. Wait, SRPT. There we go. SRPT. Sorry about that. SRPT. Poor long-term potential, a lot of risk associated with it. You're in a slight uptrend, but not enough to offset the risk currently. So therefore, the stock is not favorable right now. All right. So I think I've gotten all of them here. Let me make sure, just doing one last quick check. Yeah, I think I've gone over the vast majority of them here so far. So let's go back to the overview page. And right now, as the market stands, we are still 3 ticks into the red. Therefore, the market is bearish, and VectorVest does not advocate buying any stocks at this time. If you guys have enjoyed today's stream, smash that like button as well. Share this with all your friends and family. If you're over on our YouTube page, you're not already subscribed, go subscribe right now. As we scroll down, we see those 3 red lights. We're in that potential confirmed down situation. Unless something drastic here changes today, which would take a lot, we need to see about a 30 or about a 24 cent move in the price of the VectorVest composite to to get us out of that confirmed down. That's a pretty substantial move on the VectorVest composite. It's going to be hard, but we could potentially get back to a confirmed up. The way it's looking, we're not going to right now. So therefore, we could finish off today's session with that confirmed down signal. Looking at the advances and declines, advances are sitting at 27% up, decliners 63%. So decliners still definitely outpacing the advances here today. Then as we scroll down, Dow's down about a little over 0.5%, Nasdaq's down about 0.6%, S&P's down about 0.6%, VectorVest composite down about 1/3%. So we have seen a slight pickup on the major indices, but nothing substantial or nothing to really give us hope that the market's going to be reversing anytime soon here today. So on that note, thank you all for tuning in here. I hope you guys have enjoyed yourselves here today. I hope you have definitely learned something from today's session. If you have any questions, if you're watching this on the replay and you have any questions, as always, give our support a call. They'd be glad to help you out. And if you're on our Facebook page, make sure to like the VectorVest Facebook page. That way you get the notifications, letting you know every time we go live here. If you're on our YouTube, make sure to click that little notification bell. That way you get the notifications of when we go live. And on that note, thank you all. I hope you have a great rest of your trading day. Be careful, be safe, have a great weekend, and make sure to be here at 11 a.m. Eastern as we kick off the next mobile stream next week. So until then, take care. Adios. See ya.